Hi, welcome to Curious Bricks. Today we're going to talk about Expedia Group, ticker symbol EXPE, Q3 2020 earnings report. EXPE is part of S&P 500 index under the consumer discretionary sector. The company's earnings call was hosted on November 4th, 2020. Since this is our first time covering Expedia Group, we will start with a quick overview of what Expedia Group does and how they make money. Expedia Group is an online travel agency, or known as OTA, and has an annual revenue of roughly $12 billion. Similar to Booking Holdings, the business has merchant, agency, and advertising segments. In addition, the company reports its alternative accommodation business, Vrbo, separately. Comparing to Booking Holdings, EXPE has a larger share of merchant business, which makes money from transactions occurred on Expedia Group websites. The commission-based agency segment reports a total of $3.2 billion revenue. Advertising and Vrbo each reports revenue slightly over $1 billion. Before we dive into the financial details, let's take a quick look at some key statistics. As of November 20th, 2020, Expedia share price is $119.90, and its market cap stands at $17 billion. The trailing price-earning ratio is not available, since its earning per share is negative. Expedia Group does not pay out any dividend. Now let's take a look at their latest quarterly financials. We will start with the income statement. In Q3 2020, EXP reported a total revenue of $1.5 billion, which is 58% lower than the same quarter last year. While revenue declined significantly in Q3, it was still a sequential improvement from the previous quarter. In this quarter, the improvement was driven by stronger demand in North America. On the other hand, operating income comes in at a negative $113 million, or 119% less than the same quarter last year. During this quarter, the company slashed sales and marketing expenses sharply to align with the new market demand. Cost of revenue would have been better if not factoring in Vrbo's recent shift to merchant of record and the divestiture of bodybuilding.com. EXPE also published two other revenue breakdowns in their 10-Q filing. Based on business model, we can see its agency revenue was down 72%, which is higher than the overall 58% decline. Looking at the revenue breakdown by service type, lodging was the brighter spot in this quarter, only down 52% year over year in comparison with the other services. Now, moving to the balance sheet, EXPE improved cash and cash equivalent by roughly $1 billion from end of 2019. During the same period, the company nearly doubled its long-term debt to $8.2 billion. Accounts payable and deferred merchant bookings were reduced significantly by almost $4 billion, which hurt the company's working capital. In this quarter, management presented a strong result from Vrbo. Cost-cutting is the main focus by the management team. The company targeted three areas to improve costs: resetting fixed cost base, reducing variable cost of revenue, and increasing marketing efficiency. The company expects to deliver a total of nearly $1 billion cost savings from these efforts, assuming 2019 run rate. Multi-brand optimization remains a key priority by the management team. They are still in the process of integrating the data pools from all portfolio brands. During the Q&A session, analysts were extremely interested in the future plan for Vrbo. Rebranding Vrbo was lagging in the past, but management seized the opportunities to improve the brand and expand its margin. The future of multi-brand strategy and increasing marketing efficiency are also of interest to the analysts. Through data consolidation and recalibrating its algorithm, the company plans to develop a strategy to differentiate each brand in the markets they serve. And through this process, they can use more targeted and personalized approach to increase marketing efficiency. Now let's take a look at EXP stock performance before and after the earnings call. EXP reported revenue of $1.5 billion, beat analysts' expectation of $1.4 billion, and its adjusted net loss of 22 cents a share is also smaller than the consensus of 79 cents loss per share. On the following trading day, the market reacted positively after the earnings call. Lastly, here is the latest summary of analyst ratings of the company. Currently, there are 31 analysts covering EXPE. After the earnings release, several analysts upgraded EXPE from hold to buy and strong buy. If you are interested in knowing more about the company, I recommend you do an in-depth study of the company's SEC filings. Thank you for watching this video. If you like this video, please subscribe to our channel.